It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Wednesday evening, October the 19th, 2016. Boy, Crude looking pretty bearish after collapsing off last week's high. E-mini S&P is bullish and trying to finish off a measured move, but there's a little bit of a problem for the bulls on the S&P. Gold is bullish and trading near the lows of a range, trying to make its rotation higher. And Euro is bullish, rotating back off the lows of the range we talked about in last night's newsletter ahead of tomorrow's highly anticipated ECB announcement. We have some big news, some big ranges, and of course some big opportunities waiting for us tomorrow, guys, and I have a great plan of attack for you. Before we jump into the charts and take a look at the strategies for tomorrow, please remember, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're not watching the video right now on our blog here, if you're on our YouTube channel, not to worry. There's a link in the description of the YouTube video. Follow that link. Come over here and join me on the blog for the full-length version. And while you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Download those charts. You can find the link right below the video. That way you'll have those charts ready for tomorrow. In the upper right-hand corner, don't forget to grab your free pass. If you're not a member here at School of Trade, I got a free pass for you guys and gals. Come out and join me as a guest for a few days in the trade room. And don't forget, if you're brand new here to the SOT community, you can find out the who, what, where, when, and why by using our frequently asked questions page on our blog. And I'm always standing by here, guys, to answer your questions. If you have any, use the live support button on the right-hand side of the website. Hope you guys had a great week so far. We made it through Hump Day, this third week of the month of October. We're working our way through this third week. Let's take a look at the schedule for tomorrow, for Thursday, October the 20th. We get some big news on the schedule here. We get, of course, the retail sales at 4:30 a.m. tomorrow. The big ECB announcement tomorrow morning at 7:45. 8:30 jobless claims in Philly Fed. 10 o'clock, we have that existing home sales, and that will wrap up the news for tomorrow morning and for the rest of the day. The big news tomorrow, if you're trading the euro or gold, will definitely be the ECB announcement tomorrow morning at 7:45 a.m. Jobless claims shouldn't be that big of a market mover, but the Philly Fed definitely will tomorrow at 8:30 a.m. Then, of course, always a very important news report, the existing home sales at 10 a.m. tomorrow. So if you're gold trader or euro trader, be aware of that ECB announcement tomorrow morning at 7:45. And usually what happens is Draghi will take the microphone between 8:15 and 8:30. So you're going to get the announcement at 7:45, and then, of course, you've got the press conference at 8:30. That's when the good stuff happens. That's when the good stuff happens, when Draghi, of course, is left out there to answer all of the kind of impromptu questions that get thrown at him. So be aware of that tomorrow, the ECB announcement at 7:45. It'll usually last until about 8:45, 9 o'clock, right? And then, of course, once we get that finished up, the press conference, that is, then the markets are ready to finish up their morning session. We're going to take a look at that in just a moment on the gold and the euro. But be aware, though, if you trade in the euro tomorrow, right, we are going to be seeing some consolidation ahead of that news tomorrow morning. And then after the news, like a jack in the box, right, expecting some explosive reaction to the announcement tomorrow morning. So be ready for that. Let's jump into some charts here. We'll go crude, S&P, little bit of gold, and we'll wrap up here with the euro tonight. Crude is bearish after collapsing off last week's high, and now sellers will be looking for the next opportunity to run this price back down to where the move began earlier this morning. After such a strong move lower, we know the sellers have control at this market at this point, and strong moves tell us we're likely going to see another leg lower, which means sellers will be looking for opportunities up at the moving average, the high of the bear channel, and of course that reversal line at 51.88 for a target going back to test the correction zone from that spike in channel that started off the day today. And of course, we talked about that from last night's API report, right? The buyers, on the other hand, need to be patient right now because a move higher will run into resistance, which means they need to get a strong move up above that 51.88 reversal line and then hold a pullback for a move back to challenge today's high. And the key word tomorrow for the bulls is strength, because last week's high was clearly an area of resistance that bears had been waiting for. As you can see here, as we open up in the overnight session, as we open up the electronic session here right now, trading just above an untested reversal line, just above that double down, and of course at the low of a short-term bear channel. big, strong move coming off of that high, right? The prior week high, clearly seen as a selling opportunity for long-term bears. You have to be thinking they want to go back to that $50 a barrel area. We'll wait and see what they can get done tomorrow. So buyers having full control. We talked about this last night, right? Strong move often results in a spike in channel. Right, that strong move often results in a spike in channel. We talked about this in last night's newsletter. That spike in channel made it all the way up, right? All the way up, of course, you can see here to that prior week high before the buyers get a lower high, and now, of course, collapse. Now, this collapse off the high may just be profit taking from those buyers, right? We really don't know what the actual cause of that is. It might be sellers of the high. It might just be profit taking from the buyers of the high. The why really doesn't matter. The what and the where is the most important thing. The what is we have a very strong move in one direction, and that very strong move in one direction means that anything now that goes higher here is likely going to be seen as a bargain for those sellers. So, of course, the moving average, the top of the channel, and if I had to guess, I would guess this 51.88 is going to be a good line in the sand there. Above 88, right, the buyers have more of a chance here. Below that 88, the bears will have more of a chance. If I'm a seller right now, what I don't want to do is sell down here at the double down and that untested reversal line at 51.52. If I'm a seller, what I really want to do is try to find a way to use the top of this channel, again, that 51.88, right? So up and back down, up and back down, up and back down, right? As it goes up, look for those opportunities to sell it back down. The moving average is overhead, and we'd love to get that involved, right, to use the top of that channel. That's one opportunity here for those bears. Another way to look at it would be if they were able to make it above that moving average, right, up that 51.88, buyer failure, and then back down again. Right, those will obviously be opportunities here. Those sellers will be drooling over, right, for that move back down. As it goes lower, you really got to be watching this area right here, that 51.52. As it goes lower, be thinking breakout pullback, because if it blows through this low, right, it's going to be considered to be technically overdone a little bit, a little bit exhaustive. So if you're going to sell the low of that bear channel, use the low of that bear channel as an area of resistance. Does that make sense? And of course, you target triple down. The big target, though, for those bears, make no mistake, is this correction zone down at 51.02, right? That 51 even. So sellers, get it up at resistance, up at the high of the channel, up at the reversal line, right? And if it happens to do something like this tomorrow, right? This may happen too. It may just jump up. Right? If it jumps up at that point, we get a strong move. I would want to wait then for that pullback as it goes back down again, right? So if it really spikes higher here, remember, this is a pretty bull market we saw today. You may see some buyers really jump on this just for whatever reason. And so we do want to be aware of that. If we do find ourselves up above that 51.08, I would just wait patiently here now, get that breakdown pullback, right? And then look for that sell right back down again, right? Not that you won't be able to get a good trade off of that, but again, if it does just punch higher here, right? If it does just punch higher here, you're going to see a lot of buyers sort of jump on that, and it may just be a little bit difficult to get it to really collapse there. So wait for it to drop, pull back, go. Again, like I said, use that 51.88, right, to your advantage here for that move back down. I would imagine this prior week high is going to be a bit of a tough nut to crack here for those buyers because, one second though, for those sellers, right, if you're going to sell it as it goes lower, right, finish off that move, get below that channel, get below that double up, get that moving average down, right, and then that will give you the protection you need. At least you'll know you have a strong enough move down. I really don't want to sell low, but if it really jams lower here, then we can sell low. How about the buy side right now? The buyers, the keyword right now is strength. In my opinion, you've really got two spots you can want to be a buyer right now. Up here, it's tough. All right, up here or coming off down here. Obviously, if we go higher here, the keyword is strength. I'm going to want to see some real big, strong candles that make it very obvious this is a bull market. What I don't want to see is a little tiny kind of hobbling higher here, because you saw what happened up at that prior week high. They're not going to forget about that, and the sellers are going to defend that area here. So anything that kind of wiggles its way or kind of slowly creeps its way higher here is going to have a tough time messing with it. So I really want to see some big, strong, mean-looking green candles, right? Get that moving average up, and then be able to hold above that prior week high. That for me is the big line in the sand. Also, too, if it does jump higher, right, be aware it may range out here. It may range out here, and buyers will start buying that low of the range, kind of like in the sense that we saw right here, right? Obviously, at the end of that big bull market, buyers taking profit there. So, again, big, strong move. Hold that pullback and go. Big, strong move. They may not be able to get a new high. Watch out for a trading range, right, and buy the low of that range. Anything else besides that, you really got to be careful buying into that prior week high. It's not that it can't work. It's just going to be messy, right? It's going to be messy. It's a prior week high up there, and you can already see the proof was already there already. Now, as it goes lower, as a buyer, you want to be thinking something like this now, right? Sellers take control. They finish off the move. They get down to the correction zone, right? They can't quite get the job done through the correction zone. They spike up, right? You grab that pullback on the way back up. Those will be, right, that'd be another opportunity here. I definitely wouldn't go for the seller failure right there, right? I wouldn't go for the seller failure, because at that point, it's obviously a bear market. But if we do get that break, strong break higher, after getting those sellers their target, then we can look for that move going right back up again. You got to wait for proof, though. You got to wait for proof. This thing collapses lower here. You've got to wait for proof if you're going to be a buyer. It's either going to be real strong move higher here for the bulls, or wait for this market to collapse on down and then start to dig their way right out of that deep pullback. This should be an interesting day tomorrow, because in all reality, we have a really big range to work with here, and we could see this thing really cooking around that range tomorrow. We'll have to wait and see. And of course, I'll be with all my students tomorrow in real time, right, in our trade room starting at 8 o'clock Eastern time. How about some S&P, shall we? S&P's bullish and trying to finish off the measured move they missed by less than a point earlier today, but an overhead resistance trend line might give them a run for their money and give those sellers a chance to send this price back into the correction zone tomorrow morning. The buyers have control, but they aren't able to get their targets today, which could mean they'll be coming back to get them, or this could mean the market needs to rotate lower to attract more buyers tomorrow. Buyers need to see a breakout pullback above this resistance trend line without going too close to that high of day, or run the risk of this market collapsing back down to that 2133 area tomorrow. Sellers, on the other hand, have a great opportunity if they can hold this pullback and get below that reversal line at 37.25 with a target down at 32.25, and possibly all the way back down to the low of day at 26.5. Very good example here of a market that starts off. We had a beautiful buying opportunity. Remember this from last night's newsletter? Please tell me I wasn't the only one watching this today. Beautiful trap low, right? Oh my goodness, just gorgeous. Anyways, well, that trap low we talked about in last night's newsletter turns into a beautiful spike in channel. This spike in channel, of course, now gives us a correction zone. That correction zone is going to be the target in the short term for those sellers. We also have what could be seen as a bull wedge. I do like this as a wedge, and that wedge gives us a target among many other targets up here that were not reached earlier on today. Look at all the targets overhead here. Wedge target, measured move target. They didn't fill the gap, right? You're going to leave a gap just hanging out there like that, bulls? We get that lower high. That lower high creates an area of resistance, and now those buyers are butting their head against that falling resistance trend line. The one thing that stands out here right now is this market was nothing but bullish all day long, and they got nothing accomplished, basically. They made a couple new higher highs, but they didn't get a measured move. They didn't get their wedge. They didn't get their double up, right? Now they're pulling back, kind of limping lower here. You know, normally when I see a market miss those targets like this, I think it's unfinished business, right? It's going to go back and get it, and it might. But the way this market looks right now, this this right here does not look like a market bouncing off the low of a spiking channel. So while we still need to see evidence of this